All right, Matty, welcome back to the Ask Matty show. Matty, how are you feeling today?
Hey, I'm doing great. I had a super productive weekend. Always excited to start the week with the Ask Matty show.
Yes, Matty, we got a lot of good topics today. A lot of you are questioning technical analysis. Wow, shocker. You guys love to question TA for some reason, and we're going to get after it today. Matty's going to go all on board there and just flame you guys on TA, showing you a couple of charts there. I already told them, Matty, you got to be prepared for this because we don't like you guys questioning TA because we are so set. We believe in these charts, and you should too. But we also got some other questions with Casper. But before we get into that today, team, please become a CryptoCharge member. Click the link in the pinned comment below, take you directly to our website. Also, shop at CryptoCharge.com. Get some swag. Matty, not winning swag today. What are we doing?
I'm sorry. I had to be a little bit individual today, but usually I'm rocking something CryptoCharge related.
Team, me and Matty actually have been talking about swag, and hopefully we can hit some ground going. I know we got a lot of ideas. Matty says a lot of quotables. I'm like, that would be good on a shirt. So maybe we'll get going on that. But lastly, team, please subscribe to this YouTube channel. Greatly helps us grow. But today, we are going to get into all your comments, questions, hot takes. We're about to get into it. Matty, are you ready?
Let's do this thing, baby.
Joseph Guarino says, what happened to Casper, Matty?
What do you mean? What happened to it? That's my favorite question, right? Like, you buy it and it drops like 3%, and everyone's like, "What happened?" But it's fine if you guys are not in tune with the charts and this isn't part of your daily process, which it should be. TradingView is free for the light version. You get some ads and you get some other features that are disabled, but the basics and having a watch list. All those things are free. So, keeping up, understanding where those key levels are, that's going to make things a lot easier for you. But we can actually take a look at the most recent Casper chart. And this is something I made my team super aware of previously. So we can see here on the Casper chart that we started to develop a pattern here. And this is a very classic pattern. You can find this in technical analysis textbooks from the 80s, which I have heaps of. A lot of them are, a bit dated now, but there's still some of the same information that we used from the 80s still in 2023 today, right? So we have, 50 years of some of the same tools being used here. But this is a structure that's a distributive structure. So from the grand scheme of things, right, I think that Casper has built an excellent base in here, right? So since May of 2022, we came down, created a very nice accumulative base. We popped off, fired off into some of the previous resistance here. So this is support here. That support was turned into resistance. Okay, that's a very classic play. We could also see the inverse of this and see the flip inverted the other way. But within accumulative structures, it's still okay to have distributive structures, and I try to explain this all the time because once people see distribution starting, they automatically think new lows are incoming. This is trend continuation. We're going to see nothing but downtrend from here. But I've shown on the Bitcoin chart many times where, especially even in this last cycle, you have the bottom come in, you have this retrace, you have a distributive structure that forms, you have a new higher low that forms just 25% from the lows and then continues higher. And that's still a set of series of higher highs and higher lows. Now, what I am looking for here is actually a very big buying opportunity for Casper. So, I know some of you guys have been accumulating for a long time. For me, I've been accumulating since about 7 cents or so. Obviously did a ton of buying back down in here during 2022, really cranked up my DCA in here. So my average is kind of in that 2.83 cent pocket now because my buys weren't so aggressive at higher prices. So I'm really happy with my overall average. But let's say you guys have an average up here, maybe in the 5s or the 6s, which again, grand scheme of things, it's excellent. Yeah. It's still excellent. That's so early, right? That's like saying I bought Bitcoin at $6,000 instead of $3,500, right? Like you're still a legend in most people's eyes. But I am expecting this to break most likely back down into kind of this 2.2, 2.5 cent region, back down into this area here. Technically, the head and shoulder could take us a little lower than that. That could take us about 41, 42% down. And from that neckline, that puts us, deeper than that. That puts at new lows just around 2 pennies. And again, I'd be happy to pick up in 2, but I'm going to be aggressively setting some limits down here between 2.6 and 2.1. Right now, MEXC is kind of the only place that, you're able to do it. Another place that I saw recently that listed it and has a US based platform for US customers is CoinList. I just applied for an account on Friday. I'm still waiting for it to be approved, so I can't give it the seal of approval if it's a good exchange yet. I'm going to have to test the liquidity, see what the hold times are. I want to make sure that it's a good platform before I recommend it. But right now, MEXC is kind of the go-to place. If you like paying 3.5% on your deposits, you can do it on Uphold. But again, MEXC is a very good exchange. All you have to do is move your coins, your stable coins from Coinbase over there, and then you can go ahead and complete those transactions. But that's kind of the value buy and giving you guys the sneak peek. But this is something that CryptoCharge members have had for a while now. We've been tracking and identifying the structure, and we were very aware that Casper potentially had some lower levels to it.
03 Cardi 619 says, "Bro, I can't even get Casper. I'm in Cali and my week gov restricts all the damn exchanges and I don't know how to do the VPN shit." So, shaking my head. Sorry. I always mess up that acronym. Matty, California people, what are they going to do for their Casper?
Man, brother, I hope you're not a Gen Z because you have access to YouTube. You were born into YouTube. You should know how easy a lot of this stuff is, right? So a VPN is so simple. First of all, it just stands for Virtual Private Network. And I'll show you mine right here, actually. So this is called ExpressVPN. I've used this for a long time. We'll drop a link in the bio. You guys can get 30 days free if you click that, and you can just try it out for free. It's so simple. And you can actually, if you wanted to, you could wrap your entire router with this. You can connect as many devices you want. You can install this on your phone, and you can select different countries. So, in this instance, I like Australia. You can pick other countries that any country that's not on the blacklist. I just stick with Australia because it generally is never on the blacklist. Once you select the country, you click on. You literally just click this on button. If I click it right now, it'll disconnect me and reconnect me to the internet. And obviously we can't do that on stream here, but it's that simple. It literally takes 2 seconds. It connects you to a new server. There's other benefits as well. Of course, for crypto, it's nice, but let's say that you guys want to watch Netflix shows or Hulu shows or other content that's only available in other regions. Just flip your VPN to Mexico or Japan or whatever you want to do. And you can use it for that as well. And of course, overall, VPN is great for internet security. So when you get online and you're on your banking apps and you're doing all this stuff, popping in your passwords and all your other information, right? When you're using just a regular internet connection, of course, over the years, internet safety has increased exponentially. But with a VPN, what you're doing is you're making it more difficult for somebody to intercept your internet connection or potentially log the activities that you're doing while you're on the internet, right? So it's just overall great safety. I think it comes out to like $12 a month. You end up saving more if you with the annual plan. But again, 30 days free, link in the bio.
Rico Haynes, 1980, says, "All technical analysis on any crypto projects are utter and complete nonsense. Technicals are achieved over years of institutional investors purchasing."
So how do you guys think that day traders on Wall Street make their money? Do you think that they just look at assets and they go, I have a really good feeling this is going to dump today, so I'm going to short this? Or I think the charts look pretty decent, even though there's no technical analysis I could do on this, and they're going to rip 30% today, I'm just going to enter this trade, right? That should already first and foremost tell you that there is some method to the madness when we look at charts. And when we come to technical analysis, of course, some of it's subjective. We try to use as many tools that have proven over time to be relatively, valuable and consistent, but there is no magic indicator. There's no magic set of tools. You can't take a 1D approach to trading or investing or charting as a whole, right? So first and foremost, we need to identify the macroeconomic environment, right? So even outside of technical analysis, you need to understand, what is the Federal Reserve doing with rates and how is that going to affect risk on assets like stocks and cryptocurrencies, right? Because even though you have technicals on the board, you need to be aware of that environment. Once you fully understand that environment and you're keeping up with data like CPI data, PPI data, non-farming payroll reports, right? And you're aware of all these economic factors that could affect your trades, then it's time to get into the charts. When you look at charts on bigger scales, especially old assets, right? You look at things like the Dow Jones, the S&P 500, the NASDAQ, especially the Dow Jones, great example. You can throw fibs on fractals from the 1930s and you're still going to get extensions that ended up being tops at later times, right? Even when you look at the most recent dip, that V bottom that we got in COVID, and if you haven't seen that chart before, I can tell that you probably spent no time on charts at all because it's probably the most iconic shape that I could probably draw for you freehand because I've seen that Dow Jones dip so many times. When you measure the Fibonacci from the top to the bottom of that crash, because that's how you use Fibonacci's, any reasonably identifiable range, it shows you that next top that we got in that 2021-2022 cycle was a 1.618, meaning that it was a full Fibonacci extension. It is a perfect number within the phi sequence. Now, you can say, I don't believe in moving averages. I don't believe in Fibonacci. I don't believe in any of these tools that you're using. Well, you have to understand what these tools are actually providing, right? Fibonacci's are basically just sequences that are multiplied exponentially or divided into fractions based on what range you're evaluating. They are just percentages. So there's no bullshit about it. It's just the actual numbers, right? If you were to take the numbers, you were to do the math manually, you would still come up with the same numbers that I would get within my Fibonacci sequence. Moving averages are just taking the aggregated data of a time period and then printing a line accordingly. So if I want a 50-day moving average, it takes the last 50 days worth of price action and then prints a line based on where that price action was. It's not these magic indicators that are telling you buy or sell. They're just indications of where prices had a difficult time breaking below, difficult time breaking above, where price spends more time often than not. And it's more often than not just identifying trend. So again, bringing it back to day trading, I would love to hear how you think that day traders make millions and millions of dollars for these banks without using any technical analysis at all. And think about how many VC firms and hedge funds and other companies that make millions, if not billions of dollars trading crypto, not on a long-term basis, right? We're talking about day trading. It all has to do with technical analysis. So, you want to learn a little bit more. You want to tell me it's all bullshit. That's fine. Check us out 30 days free at cryptocharge.com. You can go ahead and go through our whole platform. You can learn a bit about these tools. You can go ahead and use them for yourself and you still feel like they're BS. Let me know. And I'd be happy to make sure that we get you canceled, brother.
One of the things I love, Matty, and a lot of people bring cryptos to you, and you always will chart them for these people, but you really don't know the fundamentals, and we don't know that. But you always say, hey, like this is no financial advice, but I am just showing you what the charts are telling me, right? But we also have to do that fundamental research. That's why Matty here doesn't invest in anything that he's not fundamentally inclined to. And that's what we don't
Right.
do that crypto charge. We don't buy Luna or any of those bullshit projects because look how it ended up. Like everyone kind of saw the writing on the wall, and there was that one popular trader they ended up shorting the whole thing. But anyways, like the fundamentals is what we rely on, and we chart. But we always are going to chart because even if you look at these BS projects, they follow the charts. They follow things in a sequence. It is in nature, and you have to adopt this Fibonacci theory in order to like sort of get into this mindset. But once Matty pulls up the chart, Matty, can you pull up one chart for me here, please?
Let's go ahead and take a look at a chart here. No problem. I again, like I think you brought up a great point, Gavin. These are patterns that are found in nature. This is not something that we just strictly find on the charts. And the more that you dig on how numbers and data work in nature, you'll see that rivers and pathways and trails and all kinds of things that are not even man-made follow insane mathematical sequences that cannot be explained other than the fact that they are just perfectly designed within those sequences. But for example, here on the Dow Jones, right? I was telling you about that crazy dip, swing high, swing low in here. Look at that, 1.618. You could have used that as a target to exit here on the Dow Jones, right? If we go ahead and look even at some other assets, right? Let's look at Bitcoin here. If we look at Bitcoin, right, we were to go ahead and get rid of everything on our screen here. You guys can see that if we go from the 2018 swing high, 2019 swing low in here, right, look at that. We reach a 3.618 perfectly back here in 2021 and almost a 4.236, which is considered a full extension. Moreover, let's go ahead and just turn off the MAs here. You guys can see here the 1.618, and you guys can look up this number. It's found everywhere. There's a million videos on YouTube about how Fibonacci sequence works and how 1.618 is the golden number or the perfect number within the sequence. Look at this. So we break through it, obviously, but what do we end up doing? We end up using this as support over and over again. $30,000 ends up being the perfect 1.618. And where does this data come from? This data comes from an old cycle. It comes from the 2018, 2019 cycle, right? There's also other things that we can use within technical analysis, right? Like when we're looking at Casper and people are going, well, that wick just looks terrible. And how could you say that price is going to recover? I mean, look at this wick here. I mean, look at something like Polkadot, right? Let's look at Polkadot here. Look what Polkadot did. Does it not look very similar where you get this illiquidity wick crash, multiple lows, sideways accumulation comes and fills the wick, right? We look at something like Cadena, KDA, right? Look at this. You get this crazy wick up here. You get this crazy wick at $93. You crash, multiple new lows. You come in and you almost fill the entire wick. So again, I don't ever look to any of these individual things and say it's just the Fibonacci's, it's just the illiquidity wicks, right? We want to make sure that we're using as many tools as we genuinely know how to use, right? We don't want to apply tools that we don't know how to use. And if we are going to use them, we want to make sure that we learn how to use them and we're using them properly. Otherwise, we're going to come to unreasonable conclusions. But when you take a look at the data overall, you look at the macro support and resistance, you look at the fundamentals, you look at all of the tools that you know how to use, they can help you form a more clear analysis and a clear plan for exit. How do you guys think people come up with their price targets? It's not based on how much they want price to be worth. It's based on most likely one of these Fibonacci's, Fibonacci sequence, Fibonacci forks, Fibonacci spirals. Those are the three things that people are very big on for using their, predictions for how much price is going to be worth. Now, again, there's other factors like computational demand. How much demand is there actually going to be on that network? Because I can't promise you a full extension if nobody's going to actually be using this network, right? So again, you have to do some research for yourself, but go ahead and again, tell me how these guys make billions of dollars on Wall Street with no technical analysis.
And final thing here, Matty, wanted me to watch The Big Short, and it took me a couple months, Benny, but I did. But in that whole movie, there was this in Steve Carell's group. I forgot what they were a part of, but they had a trader. He didn't really get a lot of action because the fundamentals of the whole market was such bullshit, right? And
Right.
that kind of just sets it up right here. Fundamentals matter, but TA also matters. Look at what Matty just showed right now. Once he showed me that a couple years ago, I was sold. I was like, holy shit. A lot of people tell me today I'm investing too much in crypto, but I know where I'm buying at. I'm buying at the lows. And so going into next cycle, I have high expectations for my altcoins, because I'm an altcoin investor just like Matty here. So I have high expectation for those because I know what prices I bought it and I have expectations of where I'm going to sell at. That's all we're doing here, team. And so Matty, I'm thank you for showing that right now. I get really passionate about that because that really changed it all for me right there. So, but we have more questions here, Matty. Mr. Ever 3231 says, should we hold and hope for some better money or sell soon? I feel like asset classes before have boomed, so couldn't crypto boom in one cycle or one of these cycles?
So I'm not sure like how you're phrasing this question. I'm not sure if you're saying, like crypto has its own boom and its own cycle outside of, the stock market and other risk on assets. It's very unlikely because if you have a macroeconomic environment that is favorable to risk on assets, essentially the Fed cutting rates or keeping rates low, putting mortgage-backed securities and treasuries back on their balance sheet, not letting them roll off, right? Being very accommodative to the economy. It's difficult for stocks not to flourish under those circumstances, right? So we have a relatively elevated stock market right now. I do think it looks a little shaky, and I do potentially see some further downside in the stock market. I also see some potential further downside in the crypto market. I could see Bitcoin dipping down into the high 19s, low 20s. A lot of people don't like that, but it would be repeating exactly what we saw in the 2019 cycle where you set that higher low that's just barely a higher low. That would, of course, put some alts significantly lower. We're seeing a lot of alts that, potentially should have retraced or pulled back a lot more, like Avalanche, like Polkadot, like Chainlink, right? A lot of these assets should have pulled back more deeply initially, and now they're doing it on the back end. And that's really one of the biggest things I talk about, is, hey, you can have these assets that do 100x and they retrace a little bit and everyone goes, oh, that's it. It's never going to go, below this price again. You can't say that, right? More often than not, you're going to come back to that launch pad where you came from in the first place. Maybe it does well again in the future, but it will crash more. Let's get back on track here though. I feel like asset classes before a boom, so this crypto boom in one of these cycles. I think that we most likely get a period of economic expansion over the next 2 years. And that's just for the entire US US economy and global economy. I think that we're going to see a very big boom in the cycle, right? And this is always part of the plan with world governments, right? It's deflate the bubble and then pump it up just a little bit more next time, and then deflate it so it doesn't pop, let it cool off, and then pump it up a little bit more, right? And that's shown in debt cycles, that's shown in interest rate cycles, it's shown in everything. It's an intentionally planned cycle. Now, do we see a time period that's slightly different than others? Yeah, of course. Kevin Cage has shown many times that it takes over 1,000 days for Bitcoin to break into a new all-time high from previous cycles. We're at like day 800 right now, so we technically are still well within bear market territory for, I would put us at another 2/3 of a year, right, within bear market. Now, of course, history is not exact, and we don't say we're going to do this because it was 1,073 days. So on day 1,073, Bitcoin breaks a new all-time high, right? I think that it really relies more on those economic expansion periods, and there's no way to say exactly when that will happen. But like I've said previously, we're heading into an election year. I think that we've done an aggressive period of hiking, and we've hiked ourselves so heavily now that we'll probably get a recession announcement. That will bring stocks and cryptos lower. That's when you should be buying. That's probably when you should be eating as much dry powder in as you possibly can. And from there, we'll probably start to see a nice, appreciation, maybe a full retrace, maybe another higher low, and then we'll probably see some better prices into the next 2 years. But again, if you're looking to increase your overall bag without adding any more money, that's something we do at Crypto Charge, right? So as Casper comes into, let's say, maybe like the 27-30 cent region, yeah, I'm going to TP a little bit there. I'm going to rebuy back in at a higher low because I know we're going to find some resistance. So there are plenty of ways to make money and realize some of those profits, sideline some of it, reinvest some of it, reinvest all of it, however you want to approach that. So that depends on how involved you want to be in your trading, right? Long term, of course, I'm not dumping long term the rest of those bags until we get to those targets, but there are going to be dozens and dozens of trade opportunities within these assets as we get into those moments of retracement.
Love that, Matty. We had a couple more questions here, but I'm just kind of XA right here because we're running a little bit long here. But team, if you do have questions, go to our TikTok, comment, leave some of your comments over there. Matty does weekly, run throughs where he'll run through some of the best comments there. I kind of grab the best comments we have here, throughout all socials to bring here so Matty can give his high level macro, kind of go extensive here. in this show format. Matty, anything to leave the team with here? Final comments.
Yeah, if you guys have, detailed questions, you guys have questions that you think that I might not be comfortable answering, you're wrong. I'm ready to get down and dirty. So if you guys have some complex questions or maybe some heavy questions, I'm more than happy to address those topics. I do come from more markets than just crypto. I understand the foreign exchange markets very well. I understand the equity markets very well. I understand plenty of other financial instruments like CDOs, obviously treasuries. So if you guys want more information well beyond crypto and you have questions that extend beyond that, don't be afraid to drop those questions, because I want you guys to be fully educated. And again, everything that we talk about here on the Ask Matty show is just the tip of the iceberg of the things that we talk about on the Crypto Charge live show, which we do 5 days a week. We also have a Discord community in there where people engage, ask questions, make sure they fully understand the content from the show. And that's really going to be the best place for you guys to have the full Q&A experience. This is really just a taste. So I hope you guys at least try that 30-day free trial. Let me know what you think. And if you're at day 30, 29, whatever, you say this isn't for me, shoot me a DM. Tell me why you don't want to continue anymore, and maybe we can work something out.
Love it, Matty. All right, team, we're done here. Thank you for joining us, and we will catch you next time. See ya.